In the meanwhile, when my presentation is getting uploaded, actually, I'd like to thank NISM for this opportunity provided to us to present to you before. And when I heard about, Mr. Jitendra called me to, to participate in the seminar. So I was busy in some other meeting, and he said like some seminar kind of actually. So I was like, okay, I'll hear about it a little later, and then the mail came in with the brochure and everything, which said that like font seminar actually. So that is to say that like, I mean, there is this creativity which you bring in into the numbers, you are now bringing into the text actually. So therein like, you are trying to crunch, 3 or 4 words into one, so that like the job of, explaining what it means is, made pretty simple actually. So thanks for that. And I hope, I feel that, being here from 10 o'clock, I feel that it's an excellent opportunity for the students and also the industry to understand, for us from the industry to understand what level you students are, and for the industry also to tell you where you are working at actually. So, yeah. So, the point that I wanted to say is I hope you have many such forums wherein you would have such interaction. And many thanks to Asim for that ground level presentation on execution strategies. And I'm not an expert in that actually, nor do I enter into that area. But my focus is mainly from the perspective of the exchange, actually. And then one of the disclaimer that I would want to make is that, yes, on the MCX, there is algorithmic trading that's going on in the commodities. And that's to the extent of 35 to 30% actually. But the point is like, the strategies that I'm going to mention or list over here are all global strategies which are employed in the commodity markets. And so the disclaimer is that as an exchange, we have a test bed in which these algorithmic trading strategies are tested for purely risk management purposes, from the exchange risk management purposes, that these algos are not going RE, and they are like within the control parameters which are set in the, the commodity contracts and things like that. And beyond that, what is the strategy is the proprietary, property of the firm which is submitting that actually. So a simple, this one from a regulatory perspective is any order that is generated using automated execution logic, which is what Asim explained as a rule, actually rule-based, can be termed as algorithmic trading. And it could be a high frequency, low frequency, or medium frequency, depending on the, execution types that you are employing on. And it essentially says that these are like computer models that takes an order and structures a sequence of trades that aim to achieve the stated objectives. And these objectives are minimizing the cost compared with defined benchmark, minimizing the execution risk, maximizing the fill rate, actually. So it also became to be called as the automated trading, algo trading, black box trading, or robot trading, whichever the way that you would say. And I more or less concur with the numbers that Asim had shown, but the point that I wanted to bring it over in front of you is that you should look at like the asset classes, actually. The Forex, the debt, the Forex, and then the currency, and then the debt, the Forex, the commodities, and then the stocks, actually. So if you look at, these are like, these are like inverse in terms of volatility levels, actually. So most of these, algorithms which are operating in these asset classes could be more like scrapers when it is, when it's talking about low volatility and things like that, actually. And a lot of these could be something like a forecast-based, a low-frequency kind of algorithms, which could be employed in stocks or commodities, which are like, very highly volatile compared with Forex and this one. So accordingly, you could see that, the highest amount of concentration of algorithms is, found in Forex, mainly because the margin rates are pretty higher and the risk of execution is pretty low. And next is your interest rate futures. And then comes the commodities, which are sitting somewhere between, are the lowest, I would say that, among all the 4 asset classes that I discussed about. So what are the factors behind? development of algorithmic trading. Obviously, from ring to to machines, then development of technology facilitated that, the electronification of the market, and since electronification contributed everyone to participate without having access to the ring or something like that, that there was an improved scale and market efficiency, and it also brought in anonymity, which was required for these algos to execute, and so thereby trading was recognized as a revenue, and so it became proprietary to trade, construct models and trade on them actually. So if you look at types of trading matrix into it's actually from a discretionary based trading. Like I have a view on the market and let me trade. You trade and have a view on the market is where the direction the automated trading is moving on. I think when it was put, the trades life has been put in a much more detail by Asim, wherein the algos that each of you would end up creating would be select the setup and then execute the trade and manage the trade or the risks in executing the trade and analyze the outcomes, and then based on the outcome you can select either the instrument or the time frame actually. So that's basically about this. I would classify algo trading strategies which are employed here into passive strategies or aggressive strategies, which was explained by Seem in the previous presentation, which is in the passive level, you have these arbitrage strategies. Mostly, I mean, these are like temporal arbitrage rather than, I would say, intermarket arbitrage, because the other market that it is benchmarking, which is your the spot markets, are not electronified for you to exactly hedge your positions in spot markets or things like that. But having said that, there is one more opportunity which is coming into the commodity markets is tomorrow you are going to have options in commodities actually. So there would be opportunities for you to construct trading and market making models in commodities at MCX. And the other one is passive market making, dealt in detail in the previous presentation. And aggressive strategies would be order anticipation, which is also known as liquidity detection trading, that involves trader using computer algorithms or the signals to identify the large orders and pushing trades according to the strategies that they would employ. And momentum ignition strategies, which is like based on small information which is coming into the market, create a momentum and benefit from the momentum. So these may not be large momentums as you would see in the stocks, because commodities are controlled by price circuit breakers, be it markets abroad, be it markets in India. The other algo trading strategies that could be observed or documented are trend following strategies, mathematical model based strategies, trading range or mean reversion, volume weighted, time weighted, percentage of volume, which are like one and the same, except for the technique that is employed, and beyond the usual algorithms, the market intelligence based algorithms. Coming to quickly our website, so to say that the regulation came into being to see should we regulate algorithmic trading? I mean there is but unfortunately there's nothing that is mentionable that happened in the commodity markets that to say that that May 6 kind of flash crash has happened, except for a 3% movement in sugar futures and some 6% movement in crude futures that had happened once in CME, and that kind of got caught immediately and then was corrected. I mean, it didn't lead to a huge flash crash kind of a situation that was in stock markets actually. So yet the regulations are emerging, so to say that the favorite thing that you would be reading about algorithm is when everybody is trying to run Ferraris, then the better way one can police the road is by putting the speed breaker, so that you may not let Ferrari to run as a Ferrari, but it may run as a a regular car actually. So that is where they are looking at putting up the speed brakes, and then trying to come up with the volume to order ratio and things like that, which are being talked about in the regulatory sphere. The thing that has been implemented in the markets over here is each of these algos would be identified by a unique code, wherein like, these algos can be actually, tracked as to what is the strategy that they have involved. And thereby, we can create an audit trail so that like if these algos end up creating risks to the market, then we can fix the risk based on or what sort of algo has created actually. So this first step has been taken in India, and regulators are now looking at what are the next steps that we need to take in order to tackle further challenges in the system. So as a result of which you today see this, either in the stock exchanges or in the commodity exchanges, the volume of algo trading happening in each of the contracts that are there in the MCX. So just to close it quickly, we commenced our operations in 2003. We are today a stock exchange, so to say, though by definition, but we are a commodity exchange trading on commodity derivatives, demutualized, fully electronic, the so-called first listed commodity exchange in India with about 85% share in the entire market volume of about 30 to 35,000 crores per day on an average basis. And the highest daily turnover that we witnessed was about 120,000 crores, which was in April 15, 2013. And as per the data, FIA data that is available today, we are the 6th largest commodity futures exchange. And the difference between the stock exchange and the commodity exchange today is we don't have colos available. So we are looking at colos to be allowed pretty soon. So we have a time speed breaker also in the commodity markets compared with stock exchanges in India. And we have about 710 members approved by both exchange and the regulator, and about 50,000 authorized person, and almost about 6 lakh terminals, which are spread over 1,705 cities and towns across India, which is much more than securities market actually. Competitive edge is step ahead in innovation, product mix, multiple domestic and international alliances, bringing international products into India, scalable technology platform, and robust business model. And the result of that is judged in the IPO, which was judged as the best mid-cap equity deal in Asia Pacific in 2012. So that's about MCX. Thanks a lot.